Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar pulled back from a weekly highs and a key level at 65.45 against the US dollar, as the greenback hit a three-year low of 96.85 on Friday, following the core personal consumption expenditure, or the Fed's preferred engagement inflation, the PCE. Core inflation rose by 2.7% annually from 2.6 in the prior period, with a 0.2% monthly increase. Along with that, President Trump continues to pressure the Fed for rate cuts before September and has recently mentioned potentially replacing the Fed Chair Powell before his 11-month termination. We're going to head to this week. We do have a slightly shorter US trading week in observance for Independence Day, but the upcoming non-farm payrolls report is expected to drive much volatility, with June jobs forecast to rise around 120,000 forecast and down from 139,000 in May, with the unemployment holding steady. Looking to the technicals though, they still are representing a slight bullish case, and if we do see a break above that key level of 65.45, could trigger stops on towards 66 to around 66.65, with support now seen at 64.80 and firmer at 64.40. The euro also pushes higher as the dollar weakens and getting closer now to its objective beyond 117.40 and on towards 118. Reassess if achieved. Looking to the downside, any weakness should find support around 116.65, and with this trend line still holding relatively well around the 115 region. Given the fact the market has remained somewhat weak to the dollar, yen has strengthened over the last week and therefore keeping the market focused on the key level of 140 to 142. As a break beneath there could give further scope towards that key level, anywhere to 131 to 127. So 140 is a big level. Any advances? Well, we've seen many attempts on the dailies to break above that 145, but struggled and therefore should continue that pattern. Looking to sterling, well, the market also rallied to a fresh 4-year high, while the US dropped to a 3-year low, as I mentioned, at 96.85. With the Middle East ceasefire easing tensions, well, the market is still somewhat strong and therefore looking to the call that I'm holding at the moment at 138 or even to 139 as an extension, with any pullback finding support around the region of 136.35 to 136.80. Finishing up with commodities, well, the market's pressuring this trend line and therefore could see bargain hunters come back into play, and if so, expect a bounce from levels where we are and on towards the region of 3,285 to 88 to 3,300. We're getting very much oversold, and also keep an eye on how the technicals unfold on the shorter term in case we do get that bounce. Wrapping up with oil, but I'm still remaining neutral due to the fact it's still pretty much uncertain to where we are around this $64 mark. If we do get a bounce, it may imply further potential to arise, but presently I still want to sit out and wait for better confirmation. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.